Welcome to the Deep Dive. We're here to pull out the key takeaways from the latest research for you. Today, we're digging into a recent Goldman Sachs equity report. It's on CamberCon, that's ticker 688256 on the Shanghai Star Market. And our goal here is really for you as an investor to get a solid handle on the investment thesis. Is CamberCon set to be a major force in China's AI chip space? Okay, so let's unpack this. Goldman Sachs, they've sought a buy rating on it, and they've bumped up their 12-month price target pretty significantly to RMB 1,835 from RMB 2023 before. Now, that suggests something like a 47% upside from the price when the report came out, which was RMB 1,243.20. That's quite a statement. So what's driving this? Why is Goldman so bullish on CamberCon right now? What are the main reasons behind this upgrade?
Well, the report points to four main drivers. Each one kind of builds the picture for investors. First up, it's about China's AI infrastructure and cloud adoption. Basically, AI chips are riding the wave of China's fast cloud growth and this trend towards, diversifying suppliers. And partnerships CamberCon has with folks like SMIC, Inspur, and DeepSeek. They really strengthen their position. Plus, you're seeing actual demand grow. Government bodies, enterprises, they're adopting generative AI, and that needs powerful chips. It's not just talk.
Okay, so strong market context. What's the second driver?
Second is rising capital investment. CamberCon pulled off a successful private placement on the STAR market, raised about 5.04 billion RMB. And then that's not just cash. It's a big vote of confidence from institutional money, right? Yeah. Shows they believe in the long-term plan.
Where's that money going?
It's earmarked specifically for AI chip R&D, building out their software ecosystem, which is critical, and also generative AI platforms. And you see the demand side too, like DeepSeek launching its new large language model v3.1 back in August 2025. That points to a real need for different kinds of chipsets.
Makes sense. What's number three?
Third, they're expanding ecosystem and strategic partnerships. CamberCon's really well placed, you see, to benefit from China's big push for self-sufficiency in AI. They're working with major players, Baidu, Huawei, Inspur, Tencent, even China Academy of ICT, CALCT. These partnerships really validate their whole chip ecosystem, and they're doing more and more compatibility tests with domestic AI and cloud providers. That shows deeper integration is happening.
Okay, ecosystem is key. And the last one?
Finally, just broader industry tailwinds. China's cloud companies are spending more. It's a CapEx cycle. Take Tencent. They announced plans back in August 25 to boost their 2026 capital expenditure by, I think, 19% year over year.
19%, wow.
Yeah, a significant jump. And that spending flows directly into demand for AI chips CamberCons. Plus, AI is just spreading everywhere. Social media, e-commerce, fintech, government services. That keeps the demand for chips diverse and growing.
Right, those are definitely strong points. But for investors, it always comes down to the financials, doesn't it?
Yeah.
How does Goldman see this translating to the bottom line? What's the financial outlook?
Yeah, the forecasts look pretty strong. Goldman's projecting revenue growth, get this, plus 86% year over year for 2025 estimated.
86%?
86. And then another 13% growth projected for 2026. They've also revised their EPS estimates, earnings per share, upwards significantly, and gross margins. They're expected to widen. That's mostly because they anticipate a higher mix of software revenue, which, usually has better margins.
And valuation, what are the multiples looking like?
So the base case target price, that RMB 1,835, it implies around 44 times their projected 2030 earnings. So a very forward-looking PE.
44 times 2030.
Okay. Yeah. And about 9 times enterprise value to sales. So it definitely reflects high growth expectations baked in already. There's even a bull case target way up at RMB 3,934.
Okay, high expectations indeed. But high growth stories always have risks, right? What potential challenges did Goldman flag for investors?
Absolutely, they did. No free lunch here. The report highlights 4 main risks you need to watch. First, just execution risk. Can they scale smoothly? Going from being very R&D focused to consistently profitable operations is a big jump. It's a challenge.
Always is.
Second, competition. It's fierce. You've got established players like Huawei with their Ascend chips, the 910 and 920. And of course, international GPU giants are still in the mix where possible.
Right.
Third, geopolitics and export controls. The whole US-China tech tension, that's a constant uncertainty hanging over the semiconductor sector. Hard to predict.
Definitely a factor.
And finally, number 4 is simply high valuation. As we just discussed, those forward multiples are already pricing in a lot of success. So less room for error if things don't go exactly to plan. So wrapping it up, Goldman Sachs essentially sees CamberCon as this really strategic piece, almost a cornerstone, in China's whole AI chip ecosystem.
Exactly. That's the core view.
They believe Cambricon has strong policy tailwinds, solid funding now, and deep ties within the tech ecosystem. All that positions them, Goldman thinks, to grab a dominant slice of China's growing AI chip demand. But, this brings up the key question for you, the investor. How do you weigh that massive growth potential, especially in a sector that's strategically important and government-backed against those real challenges? The execution hurdles, the intense competition, the geopolitical risks, it's definitely a high-stakes situation. And really understanding that balance, those dynamics, is absolutely critical for your investment strategy here.